Plus, you won't be tied down to one place in the toughest job market since 1933. If you have a mortgage, it's not easy to sell, especially when house prices are collapsing. But if you're renting, you can move to where the jobs are now. Also, you might find a great place, which is already furnished like this one, saving you considerable moving costs and hassles.
Well, I think you're absolutely right, and I think a lot of people are going to go further and further toward that. I got a letter yesterday from someone who said, myself and some friends are considering buying some rental units. And I said, don't, because we haven't reached the bottom of the commercial, and those are commercial, the real estate market, and it's illiquid and has been for perhaps the last year and a half, and it's going to get worse. And let's say that the unit you buy is going to hold its value and not going to go down. You're not going to see any upside in those units or that building that you purchased if you can get a loan for the next 10 or 15 years. So why tie the money up? I mean, you can buy gold and silver or do something with it, but you don't want your money tied up.
But we're entering a period where assets across the board are deflating. That's going to continue. As you mentioned, commercial real estate is under considerable pressure. So the commercial real estate sector will continue to be under pressure. It's going to follow in the footsteps of the housing pullback. There's just no way for them to go unpunished here. I think the death knell for the commercial sector were the massive layoffs that we saw in the fourth quarter of 2008 and shaping up in the first quarter of 2009. Of course, that can only put them under further pressure. Folks, they lose their jobs. They're not going to buy a house.
There's whole buildings in major cities, whole buildings that are empty, especially in New York City, and they can't sell them, the building. They can't fill it up. The bank's going to get it back. And what's staggering to most people, and they don't know this, that let's say when I go out and buy a $100 million building, we go to the bank normally, and we say, we want to buy this building, and they'll give us a loan to purchase the building, and it's good for 5 years, and all we pay is interest. And so hopefully the rent's over expenses, and that's one of the expenses, will give us a profit. Well, what's happened now that the banks really don't want to lend on those kind of projects, they get the building back. And so that's another asset that's depreciating on their balance sheet, and that's why in the first place they don't want to make lots of loans.
All of those assets that are non-performing are going to continue to weigh down on the banking and financial sectors. You have the sector that's supposed to lead us out of a recession, i.e. financials, under even further pressure. I just don't see that boding well for our economy. Let's take a look at the outlook here before we move on to listeners' questions. If we look at 2009, I'm expecting retailers to continue to be under big pressure. You're also going to see the airlines, of course, although energy prices have pulled back as the economy continues to contract. I mean, one of the first places that will be hit hardest with all these layoffs are airlines. And then, of course, the hotel chains will also be under pressure because there just won't be nearly as much travel or transportation going on. So they're all going to be suffering this year, just as banking and the lending institutions and financials did last year.
I think the financials are the key here. And unfortunately, I do not think that they're going to get any better soon, especially from a stock point of view. And they're down, their prices, and some of them are going to go lower, like J.P. Morgan and Goldman Sachs, and Goldman Sachs much lower. I think that they're reflecting the fact that they're really all broke. And the American taxpayer, via the Federal Reserve and the U.S. Treasury, are keeping them alive. And that goes for all the major banks and brokerage houses. And, where this is all going to end, nobody knows. But I do know one thing. Historically, when you've seen things like this happen, there has been no recovery until people come to the realization that the system, on a classical basis, must be purged.
You're parroting, I think, von Mises of the Austrian school very closely.
Of course.
That's what we have up on the studio wall here. No Keynesians admitted.
That's why that big dog's there.
Yeah, the Rottweiler sits right there. We're going to wrap up, I think, this segment here and move on to our listeners' questions. Let's open up the phone line here.
Hello, Chris. Bob. This is Bob from Texas. And I've been a big advocate of owning physical gold and silver for quite some time, and of course I do that myself, but I also trade occasionally. I use the ticker symbol CEF, Central Fund of Canada. I understand that the ETFs, GLD, and SLV have higher tax implications. The one thing that caused me some concern regarding those ETFs today, I noticed Barclays has really tanked. The stock is down from some $12 or $15 down to around $4 or $5 on Tuesday. And I would encourage listeners to investigate the financial health of Barclays itself, as the ETFs they issue might one day become under increasing pressure. Have a good day. Bye-bye.
Well, hello, Bob. Good to hear from you again. You know, you raise an interesting point concerning the safety of precious metals, ETFs, exchange-traded funds. Although I was a big fan of Barclays' silver ETF, ticker symbol SLV, during the inflationary bonanza we saw in the past few years, you know, the price action has changed dramatically here in recent months. Plus, financial carnage in the banking sector, I think, will always leave a big question mark looming over the safety of those ETFs. At the risk of repeating comments from last week's segment, I remain a big fan of junk silver coins and bullion in place of the precious metals ETFs. I mean, yes, CEF, the Central Fund of Canada, does look like a safer play, but at the end of the day, wouldn't you really prefer to have the safety and the knowledge that your metals at your home or in your safe or in your safety deposit box? I no longer own any of the gold or silver ETFs, and I hope that folks will be cautious with them in the future.
I have always been against ETFs, and the gentleman Bob's observation is one of those reasons. If you look at the contractual obligations on SLV, you'll find that they can go into the futures market and use derivatives, which I don't care for at all. And it's my suspicion, and of course government won't tell you this, that SLV and GLD both are lending gold to the government, which in turn I think is manipulating the market by using it on a short-term basis. The CEF in Canada is different. If you must be in bullion in that form, that's a good place to go to. It's a good situation if you want to do that. But the bottom line is, if you're going to own gold and silver, it's 90% junk silver, gold bullion, or gold numismatic coins. And I've always been a big fan of numismatic coins because I've seen what's happened on the upside to them before. And, of course, I like the gold stocks, particularly my big three. That's my approach to it.
For folks who have vast sums of money into the hundreds of thousands and millions of dollars, gold bullion and gold coins are your best bet. You would be dealing with so many issues, transportation and movement. You'd be measuring your silver in terms of tons. And unless you're Theodore Butler of silver fame, you know, that's just not going to be practical for most folks. So gold is the concentrated way to go. Plus, it tends to outperform silver in periods of deflation similar to the one that we're experiencing today. Thanks, Bob, for that great question. Unfortunately, that's all the time we have for questions and comments today. Don't be shy. You can call us anonymously, and you can call the toll-free hotline and record a question at no expense at all. Remember, we'd like to hear those questions and comments. You can call in toll-free to you within the contiguous United States. 1-888-654-2278. The number again, 888-654-2278. You'll want to enter the login information. That's just 800 and then 7 fours. And the password's easy to remember, too. It's just 4 fours. And for folks outside the United States, you can call us, too. I don't have the number handy, but it's right there on our website. There will be a cost, though, so you might want to try Skype or some other method to call and keep the expenses low. Very good. Well, we'll wrap up the segment here. And Bob, please tell folks more about the International Forecaster.
The forecast is about business, finance, economics, and social and political issues all over the world. We publish on Wednesdays and Saturdays, runs around 35 or 40 pages each time, and we have a hard copy for those who are not on the Internet that goes out twice a month. There's 3 ways you can get a free introductory copy. You can go to our site, theinternationalforecaster.com. International, FORECASTER.com. You can email us, international_forecaster@yahoo.com. international_forecaster at yahoo.com, or call toll-free 800-375-4188. That's 800-375-4188.
Oh, by the way, did you see Arizona and Warner clinch defeat from the jaws of victory on Sunday in the Super Bowl 43?
Yes.
The underdog had it. They had it all the way, and then what was it, the last 2 minutes gave up the prize.
I know. Well, they should be proud they got there. Two great teams, and that's what competition in sports is all about. It's good. It gives people diversion. It's excellent entertainment, and at least from my point of view anyway. You know, you take it with a grain of salt. It's just one of those entertainments during your life.
Exactly. Like Yogi Berra used to say, you win some, you lose some.
That's right.